Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase, back in the Pennsylvania woods, being joined by Joe Sass, who I think was on my show yesterday.
Yeah.
Man, time flies. 'Cause I came up here. I came up here yesterday, and here we are. Also got a couple of cameos there in the background behind me. They're probably going to be coming over and getting some wine. And on this episode, I am joined by Eric Crown from Crown's Crypto Cave. Hey, you gonna join us for a little drink, or you're trading sober tonight?
A little bit of sober trading right now, man. A little bit of sober trading, my friends.
All right, cool. Hey, Crown, welcome to the show. You and I briefly crossed paths when you were a guest on the Hyperwave YouTube channel. It's so sad to hear about Tyler, man.
Yeah. RIP, man. Pour one out. Jesus, man. What a legend.
I know. Like so much to still learn from him, and yeah, it's really like it's still hard to believe sometimes. I was just still talk to Leah about it all the time, and Joe was a big fan here as well.
Happens fast, man. Sad.
I know, but a lot of people talk about you very, very positively. So welcome to the show, and we're gonna find out why. So just a very brief intro. You know what? I'll pull up your Twitter and your YouTube channel when we go to screen share. Both links are in the video description. So we're just gonna start off. Everyone knows Joe already from my channel. Perhaps some of your followers don't. So, Joe, very brief intro, and then we'll crown the guest here.
Yeah, my name is Joe Saz. I work for Block TV, analyst over there. I've been pretty heavily trading the crypto space since September 2017. So I'm a full-time trader, and yeah, that's kind of my life in a nutshell. As I'm sure you know, trading is kind of a all-encompassing life event. So yeah, that's my brief intro.
All right, cool. And Crown, I'm going to hand it off to you. Tell us a little bit something about yourself. But since this is a trading show, there are like 3 questions that I always ask to everyone. So I'm going to kick them right off the bat. How did you get started in trading? What's your experience in trading before the world of crypto? And what is it that you actually trade in crypto?
Yeah, so my name is Eric Crown, and good to be here. And of course, where did I start trading? Well, I started trading. It kind of depends when you really start to measure it, I suppose. I started going down to the floor of the Pacific Stock Exchange with my father ever since I was like 11 or 12. Didn't really start trading my own account though until it was about a decade later in my early 20s. So I started off in traditional markets, was a market maker with the Series 56 on the floor of New York Stock Exchange ARCA, trading and making markets in equity options. Did that for about half a decade-ish region, and then started to get seduced by the crypto sphere, as people typically do. Started hearing about crypto really in 2012 to 2013 is when we first heard about it on the floor of the exchange. Then started to creep up onto us. Everyone kind of kept tabs on it, going forwards. I started to get really interested into it just because, I've always been interested into that more like deep down, underground type stuff. And then, a few years later, keep on hearing about crypto a few more times, goes parabolic once again after after that last major drop off.
When did you buy your first Satoshi?
My first Satoshi, yes. So I was just about to get into that. I was actually, it wasn't until actually 2016, I believe. 2016 is when I really got my feet wet in the game. And even then, it was pretty small at first because I was still trading traditional markets. I was still a professional market maker at that point. It wasn't until about end of 2018 to 2019 where I really went full on into the crypto sphere. And ever since then, man, I've just been happy being here. I mean, it's like all the freedom that you want, plus all of the leverage that you've ever wanted. And for better or worse, there's no FINRA, no SEC kind of, overwatching this place for now. And lots of opportunity, man. So that's kind of what seduced me into here.
All right, very cool. And yeah, it's interesting that you mentioned equity options. I'm teaching options for the first time this upcoming weekend. Options was my specialty as a trader. I mean, I learned technical analysis and swing trading stocks. It's more about what you learn in the beginning, right? So no one ever taught me FX trading, so I never traded that. I learned futures trading on my own later on, but it was always equity trading. And since I was young and didn't have much money, I learned options early on, and I started trading options for leverage. And I pretty much traded every spread there ever that has a name, and even some that don't.
Yeah, it's the whole thing with options. It gives you all sorts of, well, for lack of a better term, option. It's just always a million things to be doing.
So tell us about your trading in crypto. So do you focus on Bitcoin to fiat? By that, I mean dollar or stable coins. Do you trade the altcoins? And what is your overall view on the altcoin space in general?
Altcoins, what do I have to say about altcoins? Got some of that action going on. Not interested in altcoins at all. As far as Bitcoin goes, I trade Bitcoin swaps, the inverted swaps, and then I trade the options against Bitcoin on some like Deribit. So what I'll typically do is, set my positions, get my long-term positions on spot and then futures, and then trade options against that. It's like kind of an all-encompassing strategy.
So kind of like a cover call kind of thing going on there.
Exactly, yeah.
All right, yeah, that's one of the things I'm really going to focus on in my teachings. Probably one of the most stable form of reasonable stable returns you can get is the covered call strategy. So glad you know all about that. So do you trade alts to increase your Bitcoin position, or you just stay away from that casino?
The problem with alts is, it'll look sexy from the outset. You'll see all these crazy gains and whatnot. You see this incredible volatility, which, as a trader you love. But at the end of the day, there's typically not futures on alts, so you can't take, cross positional trades. There's usually no options on alts, so no real interest there. And then on top of that, the moves are kind of faded by the lack of liquidity within them. So if you want to get a real position in altcoins, good luck. I mean, with any sort of like legitimate bankroll, you're going to really move the markets. I mean, even in a top 10 altcoin, like, for example, just pulling one out of the, off the top of my head, like Stellar. I mean, it doesn't take too much money to really wreck those markets. You can't market buy it, a ton of those without completely destroying the markets. It's just it creates more problems than it solves, really. So looks sexy from the outset, but in practicality for like real trading, unless you're like really trying to invest and you believe in one of those long term, well, probably not the best route of or call to action there.
All right. I guess, are we ready to move on to some charts? Oh, I forgot to do screen share while you were talking. So Eric Crown's info is in the video description. Here is his Twitter channel. Your YouTube game is better than Twitter. You got like 5 times the number of subs in YouTube versus Twitter. That's rare.
Yeah. I don't really focus too much on Twitter. In fact, I really rarely post.
That's how I get these links out to the videos. And how often do you do videos? Do you do them daily, weekly? What's your schedule on these bad boys?
Yeah, so I do a live stream every day at 10 a.m. Eastern Standard Time. And then I do an uploaded video, which I'll typically live stream on Twitch a few hours later, just kind of like follow up on the marks, usually during the around the daily close. And typically we can kind of catch some moves during that time, which makes it fun. And
you mostly stay-at-home trader?
I don't trade from anywhere else. Exactly.
Yeah. So explain. Have you done a lot of traveling?
Yeah. Actually, I just moved back to America. I just moved back to America for the first time in a couple of years. I've been living in Finland and Estonia for the past couple of years, and before that, I lived in all across Europe, from Budapest, Hungary, to Vienna, Austria, Amsterdam for a little while, Prague, and.
Wow. But when you go to these places, do you stay there for like a decent amount of time, or you're always on the go?
Yeah, usually a few months at least.
So can you do me a huge favor, since you're on my channel? Can you explain to the people why it's impossible to trade when you're flying from country to country every week?
Well, I mean, it would be impossible to trade the lower time frames. Absolutely.
Right.
Good luck trading hourly when
or crypto
play for 9 hours.
I think I wouldn't mind trading equities again in this space, but like I wouldn't trade crypto. Like I can't go on a 14-hour flight without internet, even in a swing position in Bitcoin.
Yeah, it only takes one of those pumps and dumps to completely wreck you. Exactly. But I don't see any harm with like the, whenever I do find myself low on time, what I will do is I'll just trade the higher time frames. The problem with the higher time frames is trades don't come around all that often. Like how often do you get a trade on a weekly? A few times a year, maybe, for like.
Yeah, no, I had one trade last year worth taking, and it cost me so much because of all the fallout from that trade. That was the infamous short trade at 6,000.
Right.
The whole BitMax debacle, and like it was, it got picked up by every publication known to man, except the serious ones like CoinDesk. They know better. even though I disagree with some of the articles. All right. Anyway, let's get into the charts. We got your background out of the way. You passed that one because I'm always nervous about people that are like, well, I just learned trading 5 months ago and now I have a popular YouTube channel, you know?
Yeah, I hear you.
Hey, so here's a new thing, right? So I think I'm a little bit older than you. So Heikin-Ashi candles didn't even, as far as I know, didn't even exist when I learned trading. So this is something that's new to me. So the guests that have been coming on, I've been trying to just get their opinion on Heikin-Ashi, if they're familiar with them, do they use them, and how?
Yeah, Heikin-Ashi is not something that I use myself. It's just not really relevant to my strategy. Doesn't really add anything to it, but they're certainly very relevant. I know a few successful traders who swear by them. Usually Forex guys really like it. Good for getting like momentous plays. And funnily enough, on Bitcoin, I mean, you basically have the perfect one picked out right now, where you realize on the monthly, whenever it starts that new trend, it actually historically speaking likes to continue for quite some time. And as you can see right now, we are in the green region.
Yeah. So here's how I usually do these shows with guests. I try to just like go through my charts and give my take as quickly as I can, though that's always challenging. But feel free to interrupt at any time to give your take on my charts or what I say. And after that, I'll hand it off to you. And then you show, I think you're only going to talk about Bitcoin unless you want to talk about other markets. Are you interested in talking about other markets besides Bitcoin?
We can talk about any markets, but I'm mostly focused on Bitcoin nowadays. Yeah.
Okay, cool. So let me go through my time frame real quick. So Joe, same thing. Feel free to throw in your opinion anytime. When we get to the lower level time frame, because Joe trades the 15-minute chart, which is why I think he's crazy, because his laptop is over in my cabin over here. And oh boy.
God damn.
We're looking at a pullback.
All right.
Liquidity check.
Okay, so let's just go through it real quick. We're gonna just go right to the weekly time frame. To me, the weekly time frame. Oh, restart my computer. This will take a little. This might take a second. So here's my weekly time frame. I don't really pay attention to the oscillators much. I'm not sure what your view on the oscillators is, since they happen to be open. The RSI is pulling back into the middle. This is generally a bearish sign to me, telling me we can go lower. The MACD is about to cross next week. Again, a sign for a potential short trade. The CMF still looks very positive, but it looks like it might get close to zero soon. And I think that's OBV that I have here. And the OBV still looks decent to me.
The funny thing about the OBV, it always looks decent until it doesn't.
Yeah. So my weekly chart has been in total neutral mode without giving me a buy or a sell, actually for over a month now. Ever since the week of July 15th, the weekly chart has been in total neutral mode, and we haven't actually moved. So I'm still waiting for, I'm still waiting for it to break one way or another. We did break this trend line, which is not a good sign. We are below the stop and reverse points, which is something Tyler and Socrates really, really like. We are now below this 7-period weekly moving average. However, I am a big sequential guy. I don't know if you're familiar with that indicator. And it's on a green price flip. I would need a red price flip to a red 1, unless we fall hard, in which case it will turn into a red 2. And then I would get my short trade on a weekly scale. So my weekly chart is neutral. It'll probably be neutral all next week. Your views on just general weekly time frame?
Yeah, general weekly time frame, more or less kind of the same with the consolidation here. I do think that it's appropriate to kind of view this with more of a neutral stance than really anything else. I mean, we are coming off a prior uptrend for the past like 6-7 months. So typically when you get into one of these massive consolidations, you're going to go with the former trend. But I do want to kind of keep an open mind on this one. If I start sharing charts, I can show that the levels that I'm looking at for invalidation on this, but basically anywhere below about 9,500 to the downside, or anywhere above about 12,400 to the upside, I feel like we have a resolution in that direction, in the same direction as that. But realistically, Jesus Christ, man, that was loud. My bad. Just let me turn that down. There we go. Anyways, realistically, we've been spending so much time in this region. I actually don't think that we're going to break it really for like another couple of weeks, most likely. I think that we're most likely to just do some more sideways action. Doing these videos and whatnot is great, but I think that we're going to be having some trouble to find things to talk about over the next week or two. I kind of agree with you that next week is mostly going to be neutralish to just sideways, just drifting it over here. I do think that the longer that Bitcoin does go sideways, the better actually for the bullish case. But the more that Bitcoin approaches this 9,500 level, the worse that it actually looks. So if I am going to be bullish here, I do have to kind of look at this as likely to kind of grind this area out and then slowly flip around, and just going to be a very, 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 very slow process if that is going to be the bullish case. On the other side, if we do break down, it certainly wouldn't hurt like the long-term structure to come all the way down to, even mid to low 8,000s or even like 72 to 7,400 is kind of where I'm looking at longer term if we actually do break down. But for right now, just holding things neutral, a little bit short on some options, on some call options, but I'd actually be happy to flip long once again. If we can get back above, especially like 11,000 would look okay to me. But man, I think it's going to be more boringness really. You spent the last 2 months going sideways, just creating lower highs and higher lows. And I think that we're just going to be doing a little bit more of that for the next few weeks, and then get resolution probably early September, probably sometime around the event that we have with Bakkt, right? Daddy Bakkt coming back in the market. And everyone's really excited about that. But I think that you're probably going to get some, similar behavior, similar psychology to what we saw during the CME futures getting dropped off, right? I mean, what is Bakkt at the end of the day? It's just another exchange venue to trade Bitcoin on. It doesn't really change the world. I mean, it's not bad. It's certainly good long term. I mean, it creates more infrastructure for the space long term, but you get event psychology, right? So tentatively speaking, I think that we'd probably maybe hold here or even rally up a little bit, leading up into that event, and then right after the event kind of debuts, then probably have a nice shakeout.
You want to comment on? Oh, I have you know what? Let me just comment on something you said real quick. I'm also with you on a lot of those levels. I just looked at a daily chart, and my daily chart has this 128-day moving average, which normally I would never pay attention to, but in crypto, it seems to be historically useful. And that's about to meet this green dotted line, which is a setup trend line. And this line has been notorious on so many time frames as a support point until it isn't. And they're going to meet at 9,500 next week. And if that level breaks down, I am definitely looking at the low 7,000s as well for the next level of support. And on the upside, a break above 11.5, though ideally 1,200, makes me bullish as hell. One other point I want to make on what you said is I'm with you. The longer Bitcoin consolidates, the more it builds for the bullish case. But at the same time, if Bitcoin continues to consolidate into the halving and then it takes a dip, that could be dangerous, because that could endanger the mining structure if we start falling into that 6,000 or lower range after the halving.
Yeah. We can actually even chart out some miners revenue too. I think I do have it over here. So
I don't have it open. Yeah, let me quickly open my lower level time frame so that my followers get my view on the market, and then we'll go to your screen share. Joe, you want to add something?
I was just curious about your take on how we're wrestling the 50 MA, especially with these like violent downside moves. Our failure to really keep our head above the water on the 50 MA yesterday, a close like an inch beneath it, and then a violent downswing.
Yeah, but it looks like it's like Bitcoin has not been respecting the 50 MA. Maybe the exponential has been working better, but I haven't been paying attention to the 50 MA at all, because it just has not been respected all year. It's just been like there.
Yeah, the 50 simple, I'm not a huge fan of right here. Even the 50 exponential, I don't find too much of a use for in this region. When things are going sideways, your moving averages are meant to kind of not get things perfectly. They're just gonna, price action is just gonna kind of like slice through it sideways, right? So right now it's not really the time to be using that, and I don't really think, realistically, I don't really think that the 50 actually holds too much weight, just in the general sphere of things. I think it's good on the weekly. On Bitcoin, it's been a pretty good. It's been a pretty damn good insight in kind of where we are in the general market phase on the weekly. But on the daily, I don't really see too much use for it, unless you're using it in confluence with your 10, 30, and 200. Typically you can find out direction for those, but that's usually momentum plays as like just a general guide for for support and resistance. I actually don't find all that much use for it in Bitcoin land. This also goes for the exponential as well. I mean, both of them are just kind of more to be used for actually just looking at their slope rather than looking at them as a gauge of kind of where we are and kind of like support and resistance. Like I think a lot of people use them. This game seems to be more about posturing of it and then crosses.
So here's a 12-hour chart. I had this green line drawn from earlier because I was looking, once we broke above this green line, sitting at just around 11,000, I was anticipating, it to go higher, broke back below, once again held setup trend, and now got rejected by the same green line, which I didn't think was going to be relevant anymore, but it still might be. And that's my point. That's my breakdown point. The Bitcoin, maybe even a little higher than that. Like if Bitcoin gets to like 9,400, I become a serious bear looking like, I don't think there's anything in the 8,000s that's a technical support point. Others can disagree. It can reverse anywhere. We all know that, but I'm not looking for a reversal until low sevens if we lose 9,500.
Yeah, I mean, if we lose 9,500, that's breaking the whole structure. I think that you have bounces along the way. 8,800 and then about 8,200 are kind of areas of interest there. But do they hold it up? I don't think that we just come down there to stop there, after putting in 2 months of sideways action here. We're building up a pretty massive cause. Whenever you spend this much time consolidating, going sideways for this long, expect the breakout to be equal to the amount of time spent. I mean, really, realistically, the last time that we spent this much time going sideways was pretty much putting in the low at 3,100-ish region. We spent from December to March there, so about 3 months. We're coming up on 2 months now on this current consolidation. I'd expect a pretty massive move based off this.
All right, and finally, my 4-hour chart, and then I'll hand it off to you and your screen share. And then when we get to the low-level timeframes, I'll give Joe the floor here. And on a 4-hour time frame, I mean, we have this downward channel that we're still respecting. We had a nice upward channel that just broke down last night. On a 4-hour chart, we are a bit of an exhaustion point because I'm using TD here, but we're now below all the moving averages. So there is overhead resistance. If I was in a short trade here, I would be a little bit concerned, and I would rather re-enter that short. If I see a reversal from the 10.5 area, I think you can still get to the 10.5 area on a back test, even if we're going to start going down. Your view on a 4-hour time frame, and then the screen share is yours.
Yeah, 4-hour, probably good for a little small pop back up, maybe like 10,250, 10,300-ish region. Then I'd be looking for it to range back down to, about $10,000 even. I think that we're going to put in some time going sideways here. Even, whether you're bullish or bearish, probably sideways is really the, is probably the real direction for the next, I don't know, maybe day or two. And then we should probably get resolution on the lower time frames.
All right, so let's get your charts up here, and I would love to hear like your, well, not necessarily your trading strategy, but your trading style. Like what time frame do you trade? What do you look for? What indicators? What's important to you? What's your general trading style?
Alrighty, let's do it. Let me get in. Here we go. Okay. All right, should be seeing my screen now. We good to go?
Yep.
Okay, beautiful. Alrighty, so let's go to a daily for a second. Starting off with this and starting off on Finex, basically major picture, basically on the same page right there. One massive symmetrical triangle. Everyone's looking at the same damn thing right now. Whether you've had like 10 years of experience or 100 years of experience, everyone's looking at this as one massive consolidation triangle. Measure move on this triangle to the downside actually would point down towards about 7,200, which does match up with the white 200 simple moving average right here, and also the blue 3/7 exponential moving average, both extremely important for like long-term, just long-term trend identification. So Bitcoin did dump down, and if it really did take, a major, massive leap to the downside here, this is kind of where I'd be looking for as like a last stop. However, I'm actually not that, it's difficult for me to be bearish coming off this former just straight uptrend for the past 6-7 months when Bitcoin's just put in, what appears to be a symmetrical triangle, which are going to be a little bit more likely statistically to break in the same direction as the former trend. So Bitcoin coming down to this cyan moving average right here, that's the 89 exponential moving average. You can see that this one's been holding up quite well throughout this whole run. In fact, taking off the drawing tools off and just looking at our major moving averages here, you see that it's getting all these lows pretty damn well. So we have 1, 2, 3, and perhaps working on number 4, higher low, although being a little bit scary nonetheless. But hey, for now it works. As long as we hold this guy, I don't really think that it's. I think it's kind of premature to call this breakdown to the downside. While higher time frames do look quite nasty. I mean, here's your 2-day, just looks disgusting. Here's your 3-day, looks equally as disgusting. I mean, they're all bad. But in crypto land, we see all sorts of crazy things happen. So I really wouldn't be looking for like an actual break on this till we close the daily below this level right here, which is about about 98.50, or even just wick below about 94, 9500-ish region. Whichever one happens first, I'd imagine that they probably happen at the same time. Then we'll probably flush down somewhere right, into the middle of the 8,000s, bounce there, and then come back, and then probably even head a little bit lower and wash everyone out. Everyone in the mother's talking about the gap from CME futures at 8,500. It's still very much there, and historically it will be relevant, but until we come back down and actually fill it.
If they're talking about that one, why aren't they talking about the one in May?
Oh, you mean the one in May? I'm not exactly sure.
No, one. The giant gap right there.
Oh, you're talking about this? Oh, this one's been filled, my friend. Look at this. You got a nice wick coming back down right here.
Yeah, and it's so funny actually. People are like, Tone, why aren't you using night mode? I don't know any traders that use night mode. When I learned how to trade, night mode didn't even exist. So so it shows you how old I am, and I just can't. I just like I tell people, look, my half a second that it takes me to read a chart and identify things is more important than your opinion on whether I'm using night mode or not.
Yeah, fair enough, man. When I learned trading, I learned on stockcharts.com, man. So it's just like,
dude, me too. I still reference it in all my workshops. Yeah. Stockcharts.com was the only website with an educational tool base at the time. Right. That's all we had back then. The chart school from stockcharts.com.
It's so awful though. For anyone who doesn't know, like you can't just like easily check your time frame here. You have to like check onto the daily and then say you have a look back period of 5 days, and then it's so awful. Honestly, TradingView.
And then they redesigned chart school and it wasn't as good anymore. But and now you're like overwhelmed. Like it was actually great when everyone only had one source to learn from. It was so simple.
Yeah. Good days. Anyways, as far as price action goes here, we are seeing a lot of momentum also to start to look like they're losing a little bit of their luster. We do see daily Stokes. They are technically crossing back up to the upside. The last few crosses from this region have been pretty damn good, but this one's still a little bit weak, nonetheless. So I would say that, just based off that, looking at daily RSI as well, just kind of coming back into this region after playing out a little bit of hidden bullish divergence. Most of the oscillators look weak here. They're not going to really be helping out too much. What I want to pay special attention to though is the historical volatility percentile. So this is a mean reverting indicator. I mean, you trade options, so you know what volatility is, but this is a mean reverting indicator, which is essentially just measuring back past prior means to return on price action, and that kind of makes up your volatility. Terrible explanation, but working definition for right now. Anyways, more importantly, it is contracting right now. As you can see, it's trending to the downside. It's been trending to the downside ever since we hit our highs at about 14,000 over here. And that tells me that this is still, yet to be resolved. We still have a little bit more time to go. And realistically, if you're looking for the big breakout trade right now, like above one of those major levels that we spoke about earlier, which we're pretty much on the same page as that, I would expect to see this confluently just absolutely just be shoved to the sky above this moving average right here. And realistically, I do think it's more likely that we see this contract further before we do see further explosions. The last time that we were extremely low was, to give you an idea, was back in March. That was coming out of this 3-month consolidation down here. Remember that? That was super boring. Bitcoin just going sideways between 3,000 and 4,000 for 3 months straight. Extremely slow, especially during that last month. And then we actually got the historical volatility percentile, like literally to zero, and then boom, explosion for a 4x move, right? So that's kind of what I'm looking at right over here. I think that we're just going to see this glide down. Bitcoin's going to go sideways for a little bit of time, and the more sideways that it goes, the better that is for the bulls. What the bears want, what the bears are salivating over right now is to get an immediate breakdown, probably within this next week or so, I would imagine, because looking at the weekly is nasty. Make no mistake about it. The 10 simple is rejecting price action as it stands right now. Now, of course, that brings up the discussion. Do you want to use the 10 simple or the 9 exponential? My mentor would use the 9 exponential. I like the 10 simple, but it does go without saying, if you want to be bullish, well, you can kind of.
Yeah, I've been using the 7 simple.
The 7 simple. I've never used a 7 simple. I've used the 10, 30, 50, and 200.
You know what? I never used the 7 simple either on the weekly until I started, working with Tyler.
Okay.
I mean, I never understood why he used the 2 simple. That never made sense to me. I always challenged him on that.
That's too close, man. Yeah.
But the 7 simple on a weekly, I've been enjoying that one.
Right. Yeah. So looking at this right here, if you are looking at the 10 simple rejecting price action, then naturally your next target is going to be probably back down around 88 to 8,900 region, just based off this right now, as it clearly is rejecting. But I wanted to bring up the 9 exponential because one of the things that my mentor used to use a lot on higher time frames was a 9 to kind of judge strength of trend, and very, very strong trends would typically just rally off their 9 exponential on like a weekly or a monthly time frame, and typically hold it there. So it's pretty damn important for bulls to really hold this this low 10,200-ish region right here on a weekly closing basis. As long as they do that, I can see this just kind of reaccumulating within this region. And you could, even call this in some ways an ascending triangle right now, but still needs a lot more time to kind of transpire. So realistically, when we look at the bigger picture, the bigger picture, meaning like a monthly right here. I mean, this is just inside stuff right now. Looking at higher time frame oscillators, I think that it's more or less okay. Looking at monthly Stokes right here, working their way out of the bearish control zone, and we saw the exact same they're working their way out of the bearish control zone for the first time in over a year, since June 2018, by the way. But we see the exact same signature over here coming out of the last bear market to bull market from December 2015, right, where the Stokes just screamed to the sky, and Bitcoin gets all the momentum.
Yeah, but here's the thing though, right? Like in the last bull market when it started, we did not go up this fast. Like, do you have any fundamental reasons as to why? I was long the bounce from 3 to 4K all the way into 6.5. But after 6.5, it just went nuts so to 14K. I could not explain it. I still can't explain it. The best explanation I have is that it's a combination of a little bit of institutional investors plus the rotation out of the shit coins, because I don't see anyone from Main Street coming in.
Oh, no, I mean, I do agree with you about soaking up the shit coins, man. I mean, all you have to do is look at the Bitcoin dominance chart, and that's been straight to the damn moon. So it does seem to me that when Bitcoin wants to run, the big boys want to put their money in Bitcoin.
So my question is, what happens when the last shit coiner has sold?
Oh, well, that's the problem. They're not going to, because they're shitcoiners.
No, but the last one that's willing to sell has sold, and that day is coming very soon.
Yeah, I mean, long term, I think that most altcoins get washed out in this market, but I don't think that it happens anytime soon, realistically speaking. People still trade penny stocks. People still trade beanie babies. Like, people are going to trade altcoins till the day we die.
No, we're not talking about trading, right? We're talking about hodling here.
Well, the beautiful thing about these shit coins is that they don't.
Let's be honest here. The reason why Bitcoin dominance went from 50 to 70 is not because of trading. It's because people are exiting their bags.
It does look like that's a pretty big thing, of course, but we can never really nail it down to one thing, right? It's never a black or white type thing. It's a little bit of this, a little bit of that. We got some new people coming to the market, of course. You got traditional land getting a little bit more of the green light to get their money in the market. Something like Bash coming into the market, something like like ETFs getting talked about. It just allows more money to flow into this market, of course. And then just like you said, you got shitcoins getting soaked up, because we're gonna probably get the next cycle soon, relatively soon as well, right? Most shitcoins, they kind of live and die through the cycle.
Sorry, what's your view on cycles? Do you use any time cycles in your trading, or it's all price?
Moon, baby. You look at the moon cycle. It's funny, if you actually do put a moon chart on your chart, it, funnily enough, will actually line up with a few things. But do I trade off of it?
We got a raid storm coming in here.
I'm protecting.
Oh, Jesus.
With the tortilla chips.
Hold on, we're gonna we got you are. We got Crypto Finally here.
Hi.
And
hey there.
We're mostly on screen share at the moment.
I'm protecting him.
All right, sorry, go on. We're
It's literally pouring rain all of a sudden.
Out of nowhere too.
Yeah.
And someone just really got it well in the comments. I mean, they pretty much just nailed it, really. So it's what we just spoke about. Why did this market just scream to the upside so damn fast? I mean, look at the historical volatility percentile right here. On a daily, it got literally to a 0. That only happens during these major massive breakdowns. We see November right on over here. That was right before the massive break from 6,000 to 3,000. Then again, right on over here in March from 4,000 to 14,000. At the end of the day, like, talking about the reasons and whatnot, it's fun to do for mental masturbation. But as far as like trading it, you can't really trade it, man. So I don't even really think about it, to be honest with you. I don't even consider it. I don't have any real reason for it, and I don't even think it matters to have a reason for it as a trader. Maybe if you're an analyst and you need to explain these moves and go on the CNBCs and do all that and kind of like entertain. But as far as trading, man, it's just how do you trade something like that? It's completely subjective. You can't really force your subjective interpretation of reality onto other people. And you're literally looking at a world market right here, which is going to incorporate a lot of that. So it's just easier to focus on the more tangible things, like these technicals, like your volatility monikers and whatnot. These things you can actually standardize in over a long period of time. We don't know why it happened, but we just know, hey, once we see something like this, it's damn likely to happen. And in this case, Jesus Christ, man, more than about a 3x from baseline? Not bad at all. And with the way that it's kind of acting right here, it looks to me like we are kind of trending down once again, which is going to likely, put in have another reaction like we see, from before, another explosive move coming in the next probably month and a half, I'd imagine, start trending again.
Yeah, it's funny you mentioned the term mental masturbation. My old boss on Wall Street, that was his favorite term. Yeah, if you want to drop your screen share for a second, you can put it back on after, and then people can see the situation that we got going on here with like holding a thought. But the sun's back out. I think we're okay.
I know, but it's raining.
No, but it's fine.
still raining over there.
This is why
it's over now. It's over.
This is why we have $3,000 laptops that are supposed to be able to handle it.
That service of me holding the cover was very expensive, mind you.
I'm gonna have to pay for that later. That's crypto finally, and we got Cody behind me as well.
It's raining again. Are you sure you don't want us to hold at your computer?
No, it's fine. We'll survive.
Okay, I'm good on the wine. Thank you, love.
All right. Hey, anything else you wanted to show us on your screen share, or we're gonna hop back onto mine and look at 15-minute charts, which is what Joe trades?
Yeah, let's go through a few more things just really quick. Right here, we can look at a few more things. So. Okay, so I also wanted to bring up an expected moves chart with regards to historical volatility, just while we're on the volatility discussion.
Hey, Crown. Well, one more thing. Like I always tell this to people and they're always like amazed. You see in the bottom right-hand corner, you have this buy and the sell window that nobody ever uses on TradingView. You can like right-click and hide that thing so it's not bothering you on any chart.
No way.
And I always blow everybody's mind.
I fucking hate that thing, man. Thank you. That's awesome. Anyways, okay, so let's look at expected moves with regards to historical volatility. Again, a mean reverting indicator set to explode. As we do see historical volatility on a daily with regards to price action collapse or in the process of collapsing over the past 2.5 months, we see exactly what we expect to see here. It's basically within a range. Does look to me like we're just gonna be oscillating, again, within this first standard deviation, which is basically between about 10,000 low and right around 10.6, 10.7 high, probably for the next week, I'd imagine. If things are going to remain bullish here, you're going to want to see this kind of curl around. More importantly, with that, let's actually check out the fear and greed index as well, which I think is quite interesting. Shout out to Ballypoor for putting this indicator together. And I just want to kind of construct a little bit more of a less dreary case. While we talked about all these bearish things, I actually don't think that looking at this bearishly until that 89 exponential on the daily breaks is the right thing to be doing. Here's our crypto fear and greed index represented in chart format down here. You can see that we are really at extremes in this.
How's that measured in Bitcoin? I'm really curious.
You mean like how do they come up with it?
Yeah.
I believe they have some sort of like machine learning technology to kind of look at people's Twitter comment or not Twitter feeds and news articles and media outlets.
Really?
Yeah. One of my friends who's a higher up at one of the big firms here in Chicago, they actually run one of these. And,
when we go back to my charts, is this publicly available? It's free?
This is not publicly available. No, you'll have to go to the man himself. Actually, he's in the comments right now, Ballypoor over there.
Okay, let me I'll make him an admin so he doesn't have to deal with I have so many trolls, man. Let me make him an admin so he doesn't have to deal with the 6-minute delay.
Alrighty, no problem.
All right, he's a moderator now. So he gives you permission basically.
Awesome. Anyway,
hey man, yeah, Ballypoor, if you want to give me permission, I'm Tone Vase on TradingView.
Very cool.
Awesome.
All right,
Thanks, man.
So the crypto fear and greed index has actually been pretty good at getting nice pivot points on the market. Even with just looking at it in the base format, looking at this area right here is like extremely fearful, and this area as here is extremely greedy. It gets, it gets those critical moments pretty damn well. Now, during 2018, we were obviously in a bear market, right? So you're naturally going to spend more time in the more critical, or sorry, in the more fearful zone, just naturally by, by the nature of it. But even then, when it gets to these extremes, once it puts in a little bit of like an iota of divergence, in the same way that you'd expect bullish divergence from like an RSI to operate, those actually do call these reversals pretty damn well. And these are tradable bounces here. I mean, these are multi-$1,000 moves. Anyways, we are now in, obviously, for the past, 6-7 months straight up market. So you kind of expect this to operate in a little bit more of a reactionary, way on the more critical levels, especially when it's counter to the overall macro trend. So in this case, we're macro up and we're coming all the way down to an extreme low right here. Not only that, but we do have that same sort of divergence down here. We have this point, and if we do actually confirm a low here, which we have not done just yet, this is still left of center, but it's kind of in the making. Looks to me like it probably does sit in a little bit of a local low. Then I'd actually look for the same thing right on over here for us to have a little bit of divergence and then put another and just actually solidify a low, coming from the critical region right here, on top of looking at this as from a price action, from a price action standpoint, just structure just in the way that it is. I would say that kind of does bode a little bit more for the bulls. But again, the most bullish thing that Bitcoin can do here is actually just go sideways. You just don't want to see this level lost, in my opinion.
I gotta say, I'm very surprised that the fear and greed index is at extreme fear right now. Like, I would not have guessed that, right? Like, if I had to guess where it would be, I would say at best it'd be in the middle. Like I'm very surprised that it's hitting the bottom area, like where it was, back at the end of 2018. That is very, very surprising.
Right. And also speaking on the fear and greed index, you can see that there's a Bollinger Band kind of applied to it, right? I'm not a huge fan of Bollinger Bands, but it actually does get these moves pretty well. Even when we just test it, usually putting in, major lows or major highs at that point. And as you can see right now, it's pretty dispersed away from each other. So we are really, to me, this is kind of suggesting that we actually have a lot more consolidation to go within this region. We're probably going to see this flip back up towards the median and actually test this median band, which is actually pretty damn highly correlated with price action, which I can show as well. Let's actually bring this up and put on a, can I do this? I think I can do this. Let me put on a correlation coefficient, also by Bollypoor. A shout out to him right now. And where's my correlation? Let me just, okay, so here's a correlation coefficient with regards to the fear and greed index and Bitcoin price. So it's essentially saying, is this legitimate or not? You can see that it gets it pretty damn well. The purple histogram is essentially telling you that this is certainly a lot more positively correlated than it is than usually it's not. And if we do expect this to actually, revert back to the mean, even just, the middle of these Bollinger Bands, then we can expect, price action to fall through as well, as it does accurately get things more or less, about 80% of the time, pretty damn spot on actually. So, we see both technicals and also like, underlying market dynamics, we'll call it, kind of lining up with each other. And I'd say it'd be really premature to get bearish until we actually break below this region right here. And until that happens, I'm actually just going to run with the former trend. As a trader, I always do that. Even though technically I'm short a shit ton of 10,500 strike calls right now, but easy enough to cover, man. When these things expire on Friday, Jesus Christ, man, you got to start trading options in Bitcoin land, Tone. I'm telling you, man, there is insane amounts of opportunity right now. No one knows how to quote these things. It's just ripe. It's right.
The last time I looked at it, they were so illiquid, and I was like, like, man, like that's the thing. Like, when I got into, I mean, like I said, I've traded all kinds of spreads. If I go back to trading spreads, I'm gonna trade the spreads that I've invented. Maybe one day I'll write a book and name them. But my thing is, right, I do take advantage of some of the illiquid trades, but usually I take advantage of terrible implied volatility and terrible time. Like that's what I do. I find those mismatches, and you still need liquidity for that, because I like taking out like a bunch of options in like a stock that people don't know, like doesn't have a lot of liquidity, but it's a popular stock name. In Bitcoin, I need to take a look, but I really enjoy my life of, I don't know. Maybe when I no longer have to explain what a Bitcoin is, I'll get serious about trading again. It's just like I just feel like there's a higher calling of making sure Bitcoin succeeds. And people don't realize that I only do this trading thing because it was a way for me to monetize my Bitcoin evangelism, because I didn't get in 1 year earlier like Roger Ver, right?
Yeah, fair enough. And I totally hear you on
But
that.
then again, if I got in 1 year earlier, like a lot of the guys I looked up to, like, Rick Falkwing and Roger and everyone else that turned God knows what, I could have been the Roger Ver of the situation and not realizing the value of Bitcoin. So I don't regret, when I got in. I'm happy with how everything turned out.
Yeah, fair enough. Fair enough. And I mean, liquidity on these options have been pretty. If you're used to traditional markets, markets are fucking penny wide, right? In Bitcoin land, they are $50 to $100 wide, and you don't.
No, I'll take a look. I'll take a look. And my thing is, again, I'm going to be teaching options this weekend, and I'm going to be educating people on how to get in between the spread. Because if you don't understand options and you're always, buying at the ask and selling at the bid, you're never going to make any money. Like, you need that little advantage. You think it's not important, but it is.
Well, it is, because otherwise you're playing the game against the people. I mean, the market makers are going to be playing the game in that small edge territory. So if you're playing the game against them, good luck, because they have, infinite amounts of resources.
Yeah. And especially when I take on four-sided leg spreads, I mean, I need to get in between the spread on every single one of the four. Otherwise, I'm screwed.
Yeah, I hear you. Anyways, just kind of wrapping it up with Bitcoin, my main message is until this area breaks, I can't really be bearish. Yes, things look kind of nasty here. All higher time frames look like they want to break down. What's most bearish for me actually is looking at the altcoins, looking at something like Ethereum, bearish as fuck. Sorry, can I swear on your channel? Is that all good? Okay, great. Okay, awesome. Litecoin, ugly as fuck. Let's see. Stellar, another top 10, super fucking ugly. Jesus Christ, disgusting. XMR.
I haven't looked at Stellar, but like Ethereum and Litecoin and like Bcash, they look horrendous.
Oh, they're all in complete breakdown mode right here. So to me, this market trades together.
You should look at them against Bitcoin. Like, they look decent against the dollar.
Yeah.
Nah, I don't know about that. I mean, when you look at them versus Bitcoin, now you're looking at two assets which are very, very volatile. It makes things really, really difficult to get a general idea of what they're.
Oh, really? I think the chart looks even more stable against Bitcoin. Like not stable, but more like complete. Because like Ethereum and Litecoin and Bcash, they're all breaking down like 3-year lows.
Yeah, I think it's important to note the relativity to Bitcoin, because if people think that they're making, $100 on an Ethereum buy or something, they don't realize that what they're doing is they're actually losing 1,000 on what would have been a Bitcoin buy.
Exactly. Yeah. So yeah, I hear you there. When it comes down to it, Bitcoin, I can be neutral on, maybe even make the case for a bullish case right here, even though it'd probably take a long time for it to really play out.
I can't make any bullish cases until the price is above. Oh, what are we looking at? We are looking at Bitcoin. Until the price is above 11.5, I can't make any bullish cases.
Yeah, I hear you there. I mean, I suppose what's most bearish for me is just the fact that most altcoins look absolutely atrocious. I mean, they are a monstrosity. All those charts were in breakdown mode. Bitcoin looks like he kind of wants to enter into a little bit of breakdown mode, probably back down here if it does happen. 8,900 would be kind of my first target on that. But for now, I'd still give the benefit of the doubt, man. I won't take that trade until we actually fully and formally break this region. And even then, I'll probably just do it with options anyways, because it's something just feels weird about this Bitcoin market recently to me. Anyways, that's pretty much what I had to say, man. So if you want to talk about the lower timeframes, I'm more than happy to hand it over.
Yeah, we'll take a look at the lower level timeframes. I'll jump over on the screen share here. And right before we do that, since I haven't mentioned it yet, I have not shilled my own work, which is check out tonebase.com. On the workshop side, the only thing I have coming up is the options webinar this weekend. What you guys do want to do is check out the Financial Summit. This is the upcoming event in Bali, which is my attempt to connect traders with profitable and successful strategies with hedge funds and algorithmic funds that can, if you're looking for more capital and developers to take those strategies to the next level. This is the main focus of the event. It will also have an educational component. It is taking place at a very high-end resort in Bali. The price tag is fairly high, but your all-inclusive resort does come with a daily massage, which is something that I'm looking forward to. But yeah, and you get all of my webinars, all of Tyler Jenks's webinars, subscriptions to Ugly. I don't know if you pay attention to Ugly Old Goat, but he started his newsletter in February, made every trade public, and turned 2 Bitcoin into 27 Bitcoin in about 3 months with spread trading, because he never wants to take a guess on the direction. And then he withdrew, went back to 2 Bitcoin, then turned that into 10 in like 2 months. It's like insane. I've never seen anybody else do that in a very risk neutral way. It's just ridiculous. And of course we got other people there. That's it. That's all pretty much my shilling. If you want to support this channel, please check out the affiliates page. I have, if you're a US trader, you have eToro and you have LVL. And if you're outside the US and other jurisdictions, you do have Deribit as an option, which we've mentioned. All right, now let's go back to the charts. Joe, 15-minute time frame. This is your domain. This is what you like to trade. This is why I have a 15-minute chart now instead of a 1-hour chart. Tell us what you're up to. And if you are in any trades and you want to make that public, explain.
Yeah, so I've been in a trade. I started averaging in my my leverage at around 10.8. I saw the signs to me that we were breaking down. I posted everything in my Telegram channel so that we have a lot of so people can really get in my head and understand exactly what I see. There's a number of things that I'd be paying attention to, and two of the biggest things are the order book, trade history. And so what I see right now, coming back to what's happening locally, we have this massive move to the downside that was immediately rejected with some upside price action just after, this was 4 or so p.m. And so that to me isn't something that's really scary just yet. This is what I would consider a liquidity check, because typically when we move down that fast on smaller time scales, sellers are seriously selling. They definitely want to get their cash. But there's always like a little liquidity check just to push the price back up. This does have a little bit more volume than your typical liquidity check, but going sideways from there, and that liquidity check not breaking the lower local high is something that worries me a little bit. So my trade is intact. I'm still in the profit. Where would I exit? Right now, I'm considering it, but there's usually a bit of a follow through when you have a pump like this, like there was at around 4 p.m. So I'm gonna let this ride for right now. We had one candle that was slightly significant, rejection, a little bit of fighting on the green 5 and 6, price slip to the 1. I'm not really too worried, and I don't really pay too close attention to moving averages, even though I have them on my chart. But the fact that we're trading above the 50 MA isn't really threatening my trade that much. I would just say this is a liquidity check for now. We are trending up. That's something to take into consideration. But I'm not going to pull my trade just yet, because all we're doing is trading right before we took another dump on the red 1 and red 2 back there just after noon. So I'm going to ride this out a little bit longer. We are creating an ascending triangle. I think now would be a decent time to take profit, and I might do that, and I'll definitely post that. But I don't really see anything that's threatening my trade as far as my entry point at 10.8. So if I did let this ride and let it bounce to 10.280. 10.3, I would be, not beating myself over the head about that.
All right. Anything else you want to add? I think we already covered some altcoins. I don't need to say anything. What's your views on gold and S&P 500, Crown?
Gold, like spot gold?
Sure. I don't know what else you were thinking, but sure.
I used to trade GLD. Basically like an ETF on ARCA.
But that's still pretty much spot gold, right?
I mean, it falls. It's not gonna be the same price, but it follows it pretty well. Anyways, yeah, we can look at gold for a second. Do you want me to screen share, or do you just want me to shot?
I have my chart up. Okay. We're still bullish. We need a little bit of a pullback, but I think I mean, we've gone up a lot, but I don't see anything that would make me call this a top. So I am expecting 1600. And let me just open up my S&P 500 and I'll hand it off to you. Whoa, nice day in the stock market. I had no idea. This is very bullish to me. Here's what, very, very simple. 2 lines. We break this green line and Trump's getting reelected. I can't make it any more simpler than that.
Yeah, traditional markets are some that have a special part, special place in my own heart, just because that's where I started. It does look to me, classically, what's going to happen here. Let me just share this one more time. Let's go right on over there. Yeah, so I'm actually looking at SPY right now, not SPX. Same thing though, just lower numbers. And to me, yeah, we're going to get a little bit of upside here, probably back up to like 295, 295 and a half, 296, somewhere in this region right here. But I think that this is mostly going to be a trap, and we actually do head lower. I don't think that we've washed out enough of the what's a polite term, retailers from this area just yet. I do think that longer term we have higher to go. I think that all the people talking about the inverted bond yields and all this bullshit, which it's not bullshit. It's just they don't tell you that it doesn't necessarily play out the same day, right? It can take years to play out. And all the people talking about this being the meltdown and recession time and all this and all this stuff, all the talking heads on CNBC, they're likely going to be wrong on this one. I think that we do have a little bit of upside here. They're going to get caught in some sort of a trap right here, then come down. Likely, I'd be looking for a move somewhere down in this 270 region. I think 276 to 274 is kind of where I'd be looking towards, and then reverse it and melt up. That's probably going to line up somewhere with the elections, and I'd imagine you're going to see Trump, bad use of words right there, but Trump's going to be talking about how the stock market's doing the best that it's ever done coming into the election time, and if he gets reelected, then we likely see this thing actually explode higher. They still have a few bullets left in the chamber on how to really just how the Fed and then the president and just all these moving pieces of financial the financial industry kind of essentially just yoke out the last few drops of free money in this market. But I think that they still have a few more tricks up their sleeve. We can still go negative rates. I mean, Japan just went negative, Germany just went negative, America's next. I think people have accepted that, and then they can just start printing more money, and then maybe a few years down the road, few more years down the road, then we actually do see like a legitimate crash, like a legitimate recession. But for the time being, man, to me, it looks like a little bit of up here. So we probably see a little bit of gold going sideways to slightly down. I think gold, which I have gold spot right here at 1502, trades within this region where it is right now, all the way down to maybe like 1480 if SPY ticks up. And then I'd actually be looking for gold to hit that next level, just like you said, about 1600-ish bucks, somewhere around this region right here from our February 2013. I remember trading this whole time. I was short the whole way down on this one. Oh man, one of the best trades of my life. And in this place right here was a very, very special moniker actually for me. So it'd be very, very cool to see it reach back into this region. All higher time frames for gold are actually still bullish here. I don't really care for
the chart of gold looks so much like the chart of Bitcoin. It's just happening 3x slower.
Yeah, kind of, except you don't here. Actually, you know what? We'll do something fun here. So, it's funny you mentioned that. Yeah. And the funny thing about that is people think that gold is like a hedge during a global meltdown, right? Well,
it's definitely not. I've talked about that many times.
Right. This is 2008 right here. We literally go down 35 fucking.
I've mentioned this many times, and I've explained why to people, and that's when I learned that gold is not a hedge against problems, because if the problems are too big, and you lost your job and you have gold teeth, guess what you're selling?
Yeah, exactly. That's one of the weird things, man. I feel like I love crypto, man. I love Bitcoin. I think it's an amazing idea, but we do have a very interesting kind of interplay here with some of the, we have like what's called crypto anarchists, in the space, and they think that traditional markets going down is going to be in some way good for Bitcoin. Well, I'm about to show you that that's actually not really true, or at least that's not the history that we've seen. If we pull up the BLX index here and overlay it on a log scale with traditional markets, again, this is SPY in the background. Let's actually put that on a line chart too. Let's do this right here. So we have SPY, traditional markets major index in the blue line chart, and then we have orange is going to be line chart for Bitcoin price. And we see that these guys are mostly correlated with each other. I mean, shit, man, you don't need to really do this, but if we put on the correlation coefficient on this guy, you're going to see very, very easily that Bitcoin price pretty massively correlated with traditional markets on the long term. Of course, this is more correlated than it's not, and in the higher time frame that we go, actually, the better that it gets. So, when we look at something like that, actually, I would say that I am a little bit. I don't think that stock market goes into like a legitimate recession from here. I do think that we have some downside, probably down to like the mid 270s, maybe over the next few months. But I think that, I think stock market works way higher, as does Bitcoin longer term. And then we'll probably get like one major correction, I don't know, maybe like another year out or something like that. I'm not really too well versed in like super long-term analysis. But looking at this right here, I mean, these guys are more correlated than they are not. And gold is the same way. I mean, when the world is hurting, there's no real hedge, right? I mean, I was talking with one of my friends, who's a higher up at a big quant firm here in Chicago. And they were trying to figure out regressions on basically what's the best hedge in a real recession, like a real recession, because everyone knows there is going to be one that comes probably in the next, somewhere between now and in 5 years from now.
It's cash. It's cash, because it's deflation, and the value of cash goes up because everyone is short on cash.
Yeah, so he actually did mention that. Funnily enough, it was found that the least correlated thing with the global markets is actually New Zealand dollar, which I was not expecting to hear. But that's kind of
I would want to look at that research. That is
right. And then the other one, man, is actually even more funny. It's it makes a little bit more sense, I suppose, but it's just funny because of the general lexicon, and that is soybeans. Soybeans seem to be the hedge. So all the soy boys that people like to get mad about, well, you're gonna have your vindication on that, I suppose. So yeah, I just wanted to show that, man, because we see these markets more or less correlated with each other. And why is that? It's probably because we have the same people moving the same money around these markets. It's no secret that everyone who wants to be in Bitcoin probably already here. There's major quant firms. There's major investment firms already in here, and they're moving they're moving money around both these markets, right? They're always going to be finding some sort of arbitrage somewhere, right? So in that way, you're going to pull everything else with each other, kind of like a drawstring, and it all equals out over time. So that's why you see things just generally move with each other, just for all those players looking for arbitrage on the macro. On the micro, you see moves up in contra here and there on like a day-to-day basis. Of course, if we put on the correlation coefficient on a daily basis, we're literally negatively correlated right now, as you can see, but that's not indicative of the greater trend. As you can see, on a weekly, it's nowhere near that. So
yeah, and I've said that for a while now. I think this 10-year bull run in the stock market, which has been unprecedented, it has benefited Bitcoin a lot, because when the stock market goes up, the economy is doing well. People have good jobs. People get raises. People are profiting. Traders are profiting from trading. And this is the perfect environment to invest in something like Bitcoin, which is a very speculative asset. And you do that when you have extra disposable income. If we were hit with a monster recession in the last 4 to 5 years, Bitcoin would have greatly suffered.
Yeah, absolutely. I mean, I think it's just one of those weird things. People in this space, for whatever reason, they hate traditional space. For who knows why, but I would say it's guided. Yeah. It's guided.
I'm with you, and that was also one of my knock on the gloom and doomers that always pray for a monster catastrophe because they think their gold's going to do well. First of all, their gold's not going to do well, and second, I don't understand why they all want like an economic apocalypse, because they basically are praying for all their friends and families to lose their jobs and be broken on the street.
Yeah, absolutely, man. It's just one of those things. You probably, until you actually go through one, until you actually know what it's like to be in economic pain, you won't be wishing for it after that point. I can tell you that.
I've only been through one. I've only been through the 2008 crisis, because I was finishing up college during the .com, and the .com wasn't that bad. It was all like only the tech guys lost their jobs. The general people were fine. But I've only been through one of these, but another one is coming. And it will be interesting to see what Bitcoin does.
Yeah, absolutely. And with that, I'll stop sharing right there.
All right. So I think we're good. I think it's been a great episode. We're going to close out on this. I usually get these questions. I didn't see them in the comments this time around. But I'm going to ask as we close out, just your probability on a scale of 0 to 100. So like 20%, 30%. Check out the Britney shirt.
Yeah.
Someone's commenting.
Yeah.
So just your general percentages. So what is your percent from 0 to 100 that we will hit 7,000 or lower this year, or low 7,000s or lower?
Low 7,000s or lower this year. I'd put it at less than 25%. Less than 25%.
Really? You think we're gonna stay above 7? We're gonna stay above the low 7,000?
Just for a second. I can do this one. I can do it just for a second. Do you want it?
What?
We can go back to screen share for a second. I can
yeah,
explain why. Okay, cool. Yeah. Okay. So the reason why I say that is because I do believe that Bitcoin is in a completely different macro phase, longer term. So I'm gonna bring you over here to Bitstamp, put on the drawing tools, and you see this dotted trend line here that all of these that these two red arrows are pointed towards. That is what I believe one of the most important trend lines in Bitcoin's history. Whenever it's a great indication of what sort of phase we're in on the general trajectory. And as you can see right here, when we're below it in, at the beginning from the genesis of like 2011 to 2013, great time for investors to accumulate, great time for traders to sell along this trend line. Once we break above it, boom, parabolic 1, parabolic 2, blow off your top. And then where do we come back down? And based upon for the next literally 2 years from 2015 to 2017 on the same trend line, right? Then we do the same thing, holds up above it, and we get to go parabolic once again. Fun times during 2017, of course. Then we blow off our top once again. And then on this one, we actually do see Bitcoin come back down and break it just like we did over here in 2011 to 2013. On that drop, also concurrently, by the way, with this purple moving average here, which is the 200 exponential, this guy right here, and he's putting them back on, and we get the same sort of behavior. Bitcoin accumulates below this region, and we get, just like we saw right over here from this first phase, and once we break above right here, boom, massive, almost 2x from 7,000 to 14,000 in the span of a few weeks. We come back and retest it a few times, so it adds more validity to it. Anyways, my point is that typically speaking, when Bitcoin takes out this trend line to the upside, it likes to stay above this trend line to the upside for quite some time. And this trend line would be coming in where? It would be coming in right along where the yellow 21 exponential moving average is, which is 8950-ish region, which again, the 21 on the weekly is kind of like a general gauge of strength of trend, right? It's kind of like your classic place to dump back down to during your bull runs, and your classic place to sell off on during your bear runs. And Bitcoin has a pretty damn good history of actually playing off it, as you can see, going all the way back here again, the yellow moving average that basically holds up all these dumps essentially during the strong trending move. So to me, that would say that it's not. I'm not saying that it can't go below. It's just we don't really see that happen historically speaking. I mean, that if we go below even this area, I think that Bitcoin's gonna have a lot longer to go, really. I mean, 7,200 would be extremely likely at that point, and I'd really be a lot more neutral on the markets. I wouldn't really be looking for Bitcoin to just go super, just turn it around from here anytime soon if we actually did break this trend line. Not only that, but we can also bring up something else that I think is quite important. Another very simple indicator, but for whatever reason, just gets things quite well. And this is the super guppy. It's just a conglomeration of moving averages. Whoops, wrong one. There we go. And this is on the. Let's go to the 3-day here. The 3-day also showing a pretty damn good historical trend here. Let's actually go to BLX index. And you can see that this thing, just in the most newbie of newbie ways of using it, whenever it turns a color, it likes to stay that color for quite some time, especially on the green ones, especially on the bull runs. This first one right here taking about 2 years to play out from, about a year and a half actually to play out from this area right here. Then we see some red for quite some time, which are typically less anyways, but the green ones like to stay green. In this one, another like 2.5 year bull run to the upside. Red for about a year and a half. Then we see green for 2.5 years right on over here. Red more recently. And then relatively recently, we turned green once again. And this green coming in right around May. And typically this thing likes to stay green for what, like literally years on end. And where's the bottom side of this, ribbon coming at? Actually 8,300. So even that would be kind of extreme in the way that I look at it. I mean, if we're talking about probabilities and whatnot, I suppose it's best to go back on over here to our expected moves chart. And if we even just put in if we even just kind of expected to move for, let's say like end of year, perhaps, which is going to be how many days from now? Like maybe 90 days or something like that. Maybe a little more than that, like 100 days, we'll call it, right? So this would be end of 2020, or sorry, end of 2019. Well, we can even see here that what's most likely to happen is actually even be extremely unlikely to even go below 8,000 according to this. It would be less than I believe about 31% chance. This is this is the first standard deviation right here as I search for my words. So that means that any move out below this region or above this region has less than about I think it's like a 31 or 32% chance to go outside that region. So I'd say that it's pretty unlikely, man. So that's kind of where I'm coming up with those statistics from. If you're talking about 7,000, then that's even less. I mean, that's below, or that's not less than that. I was going to say it's below the second standard deviation, which even less than 5% chance. But I'd say somewhere between about 20 to 30% chance that we actually even go below there before end of year.
All right, that's good to know. Okay, I got two more. All right, on the flip side of it. What's your probability, 0 to 100, that we close the year above 10,000?
I'd say 75.
75 that we close above.
Yeah. Yeah.
All right, cool. And I got one more. What's the probability that we hit a new all-time high by the halving?
A new all-time high by the halving, like as it happens?
Well, a new all-time high before up to the halving. So the halving is coming in May of next year.
Yeah. Okay. So I was actually a lot more bullish based upon a lot of things that we spoke about today. And I was actually thinking that Bitcoin did have a legitimate chance to get to 20,000 before like end of year. But I did look at a statistic that basically has shown that Bitcoin has never gotten past a prior all-time high before the halving. So I'd have to say that the numbers are against you there. I'd have to say, well, I mean, very, very low percentage, man. Whether you want to call it 20 or 10%, I'd say it's quite low.
All right, cool. I think that's a good way to close out. Go ahead and tell the audience of my channel where they can find your work, and we'll call it a day.
Yeah, absolutely. It's been a pleasure to speak with you, Tone. You can find my channel at Crown's Crypto Cave. It's a little bit more crass, but if you can deal with this, I think you might enjoy it. So it's just at Crown's Crypto Cave with a K. And other than that, man, that's pretty much my main social media venue. Also do some streams on Twitch as well. So looking forward to seeing you there. If not, well, it's been a pleasure to speak with you, my friends, and looking forward to seeing you there.
All right, man. Thanks for joining. Hope to see you on the channel again, maybe once every couple of weeks if you're available. It would be great. Thanks for joining. We're gonna call it a day. We're getting requests to have more crypto finally on camera. There she is. Hey guys, we're gonna enjoy the rest of the night. I gotta find the time to prep for the options course as well. Gonna finish that up. Hey, there you are. That one's on a minute of
I know, I was reading
a
the comment.
little bit of a delay. Thanks again, guys. We're about to fire up a barbecue, have some dinner, and enjoy the fire as the sun goes down around here. Thanks again for joining on this episode of Trading Bitcoin, and see you all on the next one, guys. Oh, and we got Cody right there.
Later.
Also tagged in a Twitter feed.
I like
you can
that
check
you
him
we
out.
got Cody.
Later, guys.